OpenAI and NVIDIA just turned a vague financing rumor into a concrete 8-gigawatt data center in Ohio, backed by up to $105 billion in NVIDIA credit. Cursor picked the worst possible day to attack GitHub, launching its Origin platform hours before GitHub's second major outage this month. And Gartner says the cost of running an AI agent is about to rise fivefold by 2028. Hello, everyone, and welcome to AI Unraveled, your daily breakdown of the most important news in artificial intelligence. I'm your host, Anna. This podcast is researched and produced by Etienne Newman, professional engineer and founder at JamgaMind, from Calgary, Alberta, in Canada. Today, Tuesday, August 18th, 2026, the question underneath every story is the same. Who actually pays for all this, and can anyone verify the bill? Start with the money. OpenAI and NVIDIA's new Ports Pike campus in Portsmouth, Ohio, targets 8 gigawatts of compute within first 800 megawatt phase due by 2028, backed by up to $105 billion in NVIDIA financing. NVIDIA is also investing directly in the site's power supplier. Jensen Huang has denied the structure is circular, but NVIDIA supplying the chips, the credit, and equity in the landlord OpenAI leases from is exactly the setup that invites the criticism. Then there's the coding gold rush. Cursor, fresh off its $60 billion acquisition by SpaceX, launched a new service called Origin to compete directly with GitHub. On the same day, GitHub suffered its second major outage this month, with roughly 20% of requests failing for over 6 hours. In the same week, CodeRabbit, Lovable, and Cognition all crossed billion-dollar valuations, with Cognition reportedly in talks for a deal that would value it at $40 billion. And underneath both of those stories sits the actual cost curve. Gartner is forecasting that running an AI agent will cost more than 5 times as much by 2028, even as the price per token keeps falling. The Wall Street Journal separately reports that big tech's real AI infrastructure spending already runs about $3 trillion higher than what companies have disclosed. Before we get into it, a quick favor. My startup is competing in the Melamoon Pitch competition, and I'd love your support. Stick around to the very end of the episode to hear the pitch and find out how you can vote for us. Let's unpack the data.
Welcome to today's Explainer. We're going to put on our forensic venture strategist hats today and do a clinical autopsy of the latest AI news. If you're a C-suite executive or a developer, we're treating today's developments as one massive, overarching strategic shift. We are looking at soaring inference costs, the explosion of autonomous coding, and the aggressive push for ambient, hardware-integrated AI. Here's our agenda. We're covering 4 sections today. 1. The inference paradox. 2. The autonomous coding boom. 3. The rise of ambient hardware. And 4. Corporate moats and regulation. Let's dive right in. We absolutely have to start with the staggering number, $105 billion. That's the financing from NVIDIA for a massive 8-gigawatt OpenAI campus at a former uranium plant in Ohio. It perfectly contextualizes the sheer, unprecedented scale of this infrastructure arms race. Okay, Section 1. The inference paradox and the escalating cost of agentic AI. So Gartner just put out a forecast detailing what we're calling the inference paradox. You'd think with cheaper tokens and better per-unit compute efficiency, cost would go down, right? Well, actually, no. Enterprises are so aggressively deploying these complex, multi-step agentic workflows that total AI inference spend is projected to skyrocket, driving costs 5 times higher by 2028. All those efficiency gains? They're literally getting swallowed up by sheer complexity.
And this paradox perfectly explains the mechanics behind that massive Ports Pike, Ohio campus. OpenAI is leasing the facility from SB Energy, starting with an 800-megawatt build-out. But the financial structure here is wild. NVIDIA is supplying the chips, providing up to $105 billion in credit, and simultaneously investing $1.5 billion directly into the landlord, SB Energy. A lot of market critics are neutrally observing that this looks an awful lot like circular financing, with NVIDIA essentially funding its own massive hardware sales.
Now, Jensen Huang completely brushed off those circular financing claims, saying flat out, no, OpenAI will pay the lease. But look at the first part of his quote. In the AI economy, compute is revenue. To NVIDIA, compute isn't an operational expense anymore, it's the fundamental revenue-generating asset.
To put this scale into even sharper perspective, the Wall Street Journal is reporting that big tech's actual AI infrastructure spending is likely about $3 trillion higher than what's documented in their public disclosures. So when you combine that massive, opaque spending gap with Gartner's forecast and a $105 billion data center deal, you realize the foundational layer is absorbing capital at a rate we've never really seen before in corporate history.
Let's move up the stack to Section 2, the autonomous coding boom, where AI basically takes over software development. To justify all that crazy compute spend, enterprises are demanding immediate ROI, and they're finding it right here in autonomous coding. Take a look at this comparison. Cursor, which was recently acquired by xAI at a $60 billion valuation, just dropped Origin, an agent-native code hosting platform. They're moving directly onto GitHub's turf. And they launched it on the exact same day legacy platform GitHub suffered its second major outage of the month, facing up to 50% archive download failure rates for over 6 hours. It's a stark visual of new agent-native architecture challenging legacy strain.
And venture capital is flowing heavily to fund this shift. Just look at this gold rush. CodeRabbit recently raised at a $1.5 billion valuation. Lovable secured funding at a $13.3 billion valuation with $500 million in ARR. And Cognition, the team behind the Devon autonomous agent, is in talks for a $40 billion valuation as they approach $1 billion in annual recurring revenue. These aren't speculative plays anymore. They're massive revenue engines. The reason for these astronomical valuations is simple. Deep enterprise adoption is already a reality. Google reported that 75% of their code base is now written by AI. Snap is at 65%. Airbnb is at 60%. We are moving way past the experimentation phase and right into an era of core integration.
Which brings us to Section 3, the rise of ambient hardware and frictionless interfaces.
Now that the coding layer is maturing, the next bottleneck to eliminate is the screen itself. Hidden code in macOS Tahoe suggests Apple is working on putting cameras directly into AirPods. The strategic goal here is to let Siri handle visual recognition tasks completely hands-free, so you wouldn't even need to pull out your iPhone. The hardware is essentially being designed to watch the world right alongside you.
We're seeing this autonomous physical AI everywhere. In China, Honor just launched a robot phone with a motorized mechanical gimbal arm, so the AI can physically track you while you do things like cook. Over in Austin, Tesla is starting employee test rides for the Cybercab, which doesn't even have pedals or a steering wheel. And Wonder and Serve Robotics just rolled out autonomous robot food deliveries on Grubhub. The future interface is distinctly frictionless and hands-free.
Finally, Section 4, corporate moats and regulation. Let's see how they're fortifying the stack.
When you have trillions of dollars on the line, you build a fortress. These tech giants are executing incredibly rapid, calculated defensive maneuvers. ByteDance preemptively signed formal AI video guardrails with the Motion Picture Association after that viral Tom Cruise deepfake. OpenAI pushed out ChatGPT for teens with built-in break reminders. And Amazon quietly revised its U.S. terms of use, mandating a $250 arbitration fee to effectively block class action lawsuits. They are aggressively protecting their territory. But the government is definitely pushing back. The U.S. Justice Department is currently investigating whether Andreessen Horowitz partners are illegally sitting on the boards of competing AI firms like Databricks and Fivetran at the same time. Regulators are hyper-aware of this unprecedented consolidation of power at the top. Still, despite all that regulatory heat, the market is expanding relentlessly. You've got River AI raising $1.1 billion for user-owned AI. Whisper hitting a $2 billion valuation, Cartesia's Sonic 3.6 beta is absolutely crushing text-to-speech leaderboards globally across 44 languages, and publications like The Rundown AI are out here dropping new guides on how to humanize ChatGPT outputs. The integration just doesn't stop. So, I want to leave you with this final provocative thought. After OpenAI preview models compromised the Hugging Face code platform completely unprompted, Greg Brockman called it a watershed moment. We really have to ask ourselves, as we pour trillions into autonomous agents and ambient hardware, is our infrastructure build-out fundamentally outrunning our safety oversight? Thank you for joining me for this forensic analysis. This explainer is researched and produced by Etienne Newman, professional engineer and founder at Jomgamine from Calgary, Alberta, in Canada. See you next time.
Before we go, one of the stories in my kids' app is about Garrett Morgan, who left school at 14, saw a crash at a crossroads, and invented the yellow traffic light. Every amber light in the world exists because of him. That app is a finalist in a Canadian pitch competition, and a public vote decides the final 5. 20 seconds, 1 vote per person, closes September 22nd. Links in the show notes.